And if we look into TP documentation, there's a three-tiered approach. Most of you most likely will know, but just to service everyone in this webinar, there are three types of TP documentation. So the first one is country by country reporting. It's more financial information related for the larger multinationals above the 750 million euros of group turnover. Then there's a master file to place your intercompany transactions in a global economic, legal, financial and tax context of the group. So there's one master file for the group. And there are local files, the third tier, that's mostly done per country or per entity to provide tax administrations with more detailed information regarding the material intercompany transactions of the respective entity or entities. And I think it's also good to know that although not all countries in the world have adopted this three-tiered approach, sometimes there's also a Form 3 documentation adopted in the local legislation. So if you draft a local file for those countries, you're always safe, but be aware if you don't, or you think you do not have the obligation, that there's Form 3 documentation could be applicable as well. Then a general misconception, what I experience from discussing with tax teams is that TP compliance and TP documentation, and very often those wordings are mixed up a bit. So TP documentation is part of TP compliance, but TP compliance is more broad in that sense. And I think if we look at this picture, we may find several challenges. I think deadline management is one of them, because TP compliance is such broad that multiple deadlines are applicable during the year. And I hear a lot of questions like, when are deadlines due for the different compliance aspects, and when to start with the TP compliance in general. And that depends on us on a couple of factors, which we will discuss later on. And to give a good example, I think country by country reporting is one of those. Most multinationals think about it in December, but then they experience that gathering the data, validating those financial data, and eventually filing the CBCR report takes up a lot of time, and that deadline is approaching by the end of the year. So more and more making it a process and starting earlier, just like with the VAT and tax reporting, other compliances, gives you more breathing space to fulfill this this compliance burden. I think it's also besides those process technical parts of handling deadlines, it's also good to zoom in on the quality of your compliance. So your compliance needs to be in line with your business, and that, let's say, the financials are in line with your TP policy. So it's not only what we often call it making paper and check the box, but it's also regarding the quality of your compliance. And keep in mind this puzzle, so to say, it gets larger every year. When we look at the DAC 7, which is fairly new, maybe pillar 1 and 2 are added in the future. So yeah, it's getting more and more. And Michael, do you have a take on this one?
Yeah, so I think indeed, so the puzzle is now nicely included in each other. So I think that's also what Coperitas does, so that it's the title of our webinar may be a bit confusing in that sense, that we named it transfer pricing documentation and Coperitas, but yeah, maybe you can answer that best, Mike. But do you feel that Coperitas just focuses on transfer pricing documentation, or would it also cover the other pieces of the puzzle, so to say.
Yeah, thank you for the question, Michael. Yeah, there was just a topic to be highlighted in that respect. But what we've did with the Coperitas software solution is made a software solution that is such flexible that it can also tackle other aspects of TP compliance. So you can create any type of document you would like. So if it's a TP policy, in the end, it's a document, so you can create it with Coperitas. And the puzzle also let's say, assumes that there's multiple connections of the same data. So it's also reusing of the same data. So it saves you a lot of time, let's say, in comparison with the old-fashioned way of handling all those compliance aspects. And the other thing is that what we envisioned is if you have one compliance software solution or one transfer pricing solution, which can cover it all, then you'll end up with one solution for the tax team as a whole. There are also several solutions in the market which cover, let's say, every individual puzzle piece on your screen, but then you'll end up with multiple software packages for only transfer pricing in that respect. So we've made a more of a broader software.
Thank you. Yeah, so also in my experience, I think it really helps that the tool is sort of flexible in that sense, or so for the listeners, when you envisage it a bit, so you have, for example, also the intercompany agreements, and you have, it works with text blocks, and you can use the text blocks in multiple files, and also includes variables and stuff, so that you mix it up a bit and use also create consistency where it's needed and possible.
Yeah, that's correct, and that's also the considerations we're going to talk about later on, I believe. Yeah.
Perfect. Then some developments. It relates a bit to the context we discussed earlier. So what we see in practice happening is that, for example, in Denmark, you should there's new legislation that you should file your transfer pricing documentation. In Belgium and Poland are, for example, transfer pricing forms that need to be filed. In Italy, I think for a lot of MNEs, the timestamp for penalty protection is about due. That relates back a bit to that you cannot sort of uphold your compliance with just having at the template and preparing everything in Word. So in that sense, what we also do with a lot of clients is that we have a sort of strategic meetings in which we discuss how do you go about your transfer pricing documentation. So there are local country requirements for which we prepare an overview, and it may vary, for example, for multinational, whether they meet certain thresholds and they have the requirement or they don't have the requirement. Then there are perhaps also for that multinational some critical countries which are larger or which are more likely to be scrutinized. And then there's also a sort of risk-based approach, whether you would opt for, say, an OECD approach, and that you just say, oh, well, we have one template that we apply to all countries, or pick perhaps a couple of countries where you say, well, these are, for example, in Italy, I want to have penalty protection, so I make a localized file, or in some other jurisdictions, perhaps you also have a reason to localize. I think this is also always a sort of balancing act for the multinational, and I think decisions should be taken deliberately and also should be taken in the context of a process also going forward. So the more you localize, the more time you will be busy with first, of course, the localization itself, but then also the maintenance of that in upcoming years, as the master file and local file are both an annual requirement, as well as the transfer pricing forms that are applicable in some jurisdictions. So I think it really helps, and it's also a relatively small investment to sort of make that deliberate decision. And I think also if you, for example, would have to explain to your CFO, why do I make a certain choice for transfer pricing documentation, and he also likes to see that you, sort of weight of the pros and cons of the various approaches that are out there, and created one that suits your company and also perhaps takes into account some developments that you anticipate.
Yeah, and I also think, Michael, that we see that a lot of companies want to take one step back to look how it's all arranged. So also what I see is interest in such brainstorm sessions are increasing. Just to, let's say, have more of a sparring session, how to improve it towards the future. And what we, from the automation point of view, mostly start with, it's also what you mentioned, there's local country requirements. As time is very scarce, I think that most multinationals feel the burden of updating all those, let's say, requirements every year. And what we do from more of a synergy view is that you can also outsource it, of course, and we do it for multiple multinationals, tracking those deadlines and local requirements. So it doesn't have to be very expensive, and that's why we also compile such overview, and usually it only costs 100 euros a country to get it tracked. So maybe we can do a nice offer as well for the participants. So if you would like to, let's see, receive an example of a couple of countries, maybe the countries we have shown you as examples, maybe just write a short email to qgacademy@quanteraglobal.com, and then we will send you a preview of that list. And maybe it's a good starting point for people to get, let's say, that step back and view what needs to be done.
Yeah, I think so. Developments, you have on the one hand, of course, the developments in the transfer pricing field, and on the other hand, you also have the transfer developments perhaps at the M&E itself. So we see, for example, with clients that are looking for being taken over, or have a massive growth strategy, that they want to have their affairs in order, and also want to be ready for example, in due diligence or other aspects may come into play. And it's good to sort of have a sort of balanced decision in that respect, that you see what risk appetite suits you, and what benefits also some aspects may have.
Yeah, and I think nowadays with a lot of, let's say, fintech scale-ups, time flies by, and they triple the amount of turnover, and before they know it, all compliance aspects will come to them, and then it's always good to be prepared how to set up such process, and what to do and what not to do, of course. Maybe that also brings us to the common mistakes.
Yep. So 4 pictures here, and they sort of intertwine a bit as well. So the most important mistake I think you can make is that you don't tell the story, right? So of course, you can simply read what you have to include in your local file or in your master file, and simply describe the facts, and don't have any further consideration. What we see happening in a lot of audits is that transfer pricing of tax authorities really look at the storyline and whether they understand it. And they can also be quite picky in, for example, if you have one sentence included that sort of reflects something that is not in line with your transfer pricing policy, then likely that sentence will be picked up, and basically you are 1-0 down in your audit. So that doesn't really help. And also you should have also reflect on the intertwinement between the various sections of the master file and the local file. So, for example, if you describe key value drivers as, for example, that the local market is very important, and that you have some aspects there that you highlight under the key value drivers, and then subsequently you would describe a principal structure in which our residual profit is allocated to the headquarter, then that sort of doesn't match up. Just sort of a simple example, but you have a lot of more sort of examples in between that wouldn't really help. And it's good to sort of have a review on your documentation to see whether that's the case in your situation. That's then also the red flag, of course. So as a TP professional, we often read, of course, transfer pricing documentation, and we sort of can immediately point out a couple of red flags usually on which tax authorities can raise questions or start issues. And I guess that also brings us to the next two pictures. So if that happens, then usually you get into a sort of firefighting situation, that you have to put all the fires out because all tax authorities are raising questions to you, and you don't have a single storyline on which you sort of can answer all these questions. While on the other hand, if you would set your storyline very on the good quality and in line with everything, and it really matches the business, and that makes it also easier, of course, to tell the story and to bring everything to it. Then once you have that set up, then of course you have to keep in mind discuss with the business whether all stays the same or whether there are some changes that you need updating. But then you can, with your sort of base documentation, you can sort of go forward and also be audit ready, because you have that quality setup. And also when you do that, it's also good, I think, to what we often also see as a sort of common mistake is that a lot of details are included in the transfer pricing documentation that are on the one hand not required. It doesn't really contribute to the storyline. It's just like sort of text out there, and it doesn't make it more clear or simple. And it takes each year, and for each person that sort of has to review your documentation, it takes time. So I wouldn't say you have to sort of limit your documentation to the bare minimum, because also tax authorities has of course a lot of a lot less information than you. So also facts that sort of that help you explain your story in an appropriate way ensures that the tax authority understands you and keeps you away from the firefighting picture. But on the other hand, also, for example, numbers that you perhaps have included once that take you a lot of time to update because perhaps the business started reporting different figures. While you want to sort of maintain your previous documentation and the previous figures that you used. Well, sometimes it doesn't really have to be that difficult, and I think that's also one of the key messages here, that set it up correctly, make it simple, and make it a process.
Yeah, I think it's a clear story, Michael. And what I usually experience is that there are a lot of, so to say, check the box oriented tax teams. What is your experience to those?
Yeah, it is a bit mixed. So I think of course, many different people that prepare documentation with different experience levels, and I think you should also respect that, of course, and it's decision of the company who prepares the documentation. And everyone tries, of course, to do that, to do the utmost to make it as solid as possible. But you see a lot of heritage often that sort of documentation is rolled forward from many years ago, and it's sort of usually people add stuff to the documentation, but they don't delete stuff because that's perhaps a bit more tricky in a way for people to do that, and that makes that the documentation sort of grows and grows and grows over the years, which also makes the burden to update it each year larger, and the chance that you include a sentence that are such a red flag are also increasing in that regard. So I think that's what we see quite a lot. And then on the other hand, you also see documentation that strictly checks the box and doesn't tell the story. So that also makes that you cannot expect from a tax authority to sort of understand your story if you don't tell it. So then they also start asking questions, of course, to get a better sense, and may also form their own opinion already before you have sort of explained yours, which makes it more difficult in an audit to take them first out of their own vision and put them into yours. So
So to summarize, it's sometimes better to let's say less is more in that sense, and it's always good to think before you start.
Yeah, so less is more is not necessarily true, because if it helps to build your story, and also I think when preparing the documentation for the first year or the first period that we perform, we always think about like, well, what sort of helps the storyline, and is this also something that is a bit irritating, so to say, for the client to update, or is it something that is sort of relatively timeless and just sort of supports it? So there's always a bit of a mix, and that also makes it, I think, difficult to say there's no one way that suits everyone. But what does, I think, suit everyone is that you first prepare one solid documentation package as a basis, and then with all those considerations in mind, and then roll that forward and make that consideration also on the previous slide on the risk-based approach, which countries to pay more attention to and which not.
Yeah, I think that's a clear story. Maybe